Welcome to Rayner's Show. This is the podcast where I interview entrepreneurs and mavericks who get shit done.
Hey, what's up, my friend? So today we have Alson Chew on the show. So Elson is an independent trader and one of the leading instructors at Pirahna Profits. So what's interesting about Elson is that he used to be an ex-proprietary trader, and to date, right, he has earned over 6.5 million US dollars, right, throughout his trading career, trading forex, futures, stocks, and even crypto. So if you want to, connect more with Elson, right, I'll put his details in the description below. Moving on, in today's episode, you will learn, number one, what is proprietary trading and how does it work? Number two, why did Elson turn down a six-figure salary job to become a proprietary trader? Then we talk about how the markets have changed over the years. We talk about Elson's price action manipulation strategy that allows him to profit in bull and bear markets. And this is the same strategy that he used to trade forex, stocks, and even the crypto markets. Then we spoke about how he spots opportunities in the crypto markets that allowed him, right, to 10x his money. Then we also talk about how he became an instructor at Pirahna Profits and much more. So all this in today's episode. Go listen to it right now. All right, Elson, welcome to the show.
Thanks, Rayner, for having me.
Happy to have you, Elson. So to kick things off, right, you have made millions as a proprietary trader. So I think people are now wondering, what is proprietary trading?
All right. I believe you also know about proprietary trading because you were there before. So proprietary trading basically means that we trade the firm's capital. Right? We don't really have like a hedge funds take management fee from investors. So the capital that was funded by the boss or the company, and then we trade and to generate net profits from the capital that we were given. Yeah, be it trading in forex, futures, or stocks. And during my time, I trade more on futures. During my first 5 years in the prop desk. Yeah. Then I get a payout out of the profits.
So I'm guessing because different firms have different arrangement. Do they pay you like a monthly, like a small allowance, or is just $0, just profit share purely?
I was lucky when during the time when I joined, right, I have this, my package was 50-50 of the net profit. So there wasn't any basic pay. Except for the first 3 months, there was this $500 like probation allowance. They call it allowance. And then the profit sharing is 20%. Then after the first 3 months, it's purely 50-50. And then there's no basic pay.
So when you say you just joined prop trading, do you have any experience trading or you just came in like brand new?
I did attended some trading courses before. In fact, one of the courses I attended is by Conrad Alvin Lim, who also trained under Adam during that time. So that course actually sparked my interest in trading and gives me a very good background to get started. But I always know that I need something more than just the trading course. I need to be there to see how the so-called real traders trade. Because I know that certain things you can learn from the books, but things like how do you handle emotions every day? What do they do when they're in profits? What do they do when they're in the loss? Do they average in or do they cut? And how do they re-enter? Of course, strategy is important. But I think the psychology part of how people handle emotions day in, day out is also as important for a trader. So that's the reason why I think it's important to join the prop desk when I was given the opportunity.
So I think speaking of opportunity, I read, I think from Adam, if I'm not wrong, he said that, I think on one of his tweets, he said you actually turned down a six-figure salary job with a top bank to become a proprietary trader. So what was running through your mind when you made that decision?
So before I graduate, I actually studied business IT. So naturally, I should go into a IT line. And during that time, I was being offered some role with the bank, one of the top banks. It's very natural for a fresh grad to actually get a job before they graduate. Maybe during my time, like I was from SMU, so a lot of us got offers before we graduate. And during that time, and before that, I actually went for an internship, right, at one of the top US bank as well. And then for the 6 months when I was there as an intern, right, I sort of experienced how is it like being a full-time employee in the bank. And just before I left, I remember my former boss actually told me this. I did ask him like, before I left, actually, I was being offered this. Should I come back or should I go for a trading role? And he didn't actually give me a straight answer. But that was after the financial crisis in 2010. And he told me this like, I still remember this very clearly. They told me this one day when I asked him for advice, and he said that if you are good, don't come back. I was shocked about his reply. And then he told me that if you come back, this is what you see, you will become like me in the next few years. He's the vice president in the bank. And of course, he has a lot of certain untold grievances, right? He has shared with me before when he was working in the bank. So he told me that if you have interest in certain things, go for it when you're young. You can make the mistakes when you're young, go for your passion. And then I did ask myself, like, what am I very passionate about? And when I do my research and I realized that at that point of time, right, not a lot of prop firms are hiring. And I was very honored to be hired by my former boss. He actually gave me a chance. And during the time when I go for interview, he actually told me that he's going to hire about 5 people only. And then from SMU is only 2, 3 is from other university. And then I happen to know, if you're going to only hire 2 from, let's say, my university, there's like probably hundreds or even thousands of people applying. Do I want to give this opportunity up? Will I be able to find back this role in the prop desk? And I asked myself that if I can get into a bank now, maybe 3 years down the road, if I really need to go into a bank, I can still go to the bank. And actually, my former boss also told me this, like, before I left, just go for a passion. Like, if you really like trading, just go for it. Right? And if you really you didn't make it, come and find me. In a few years down the road, I will just look for me and I will get you something. So that was the assurance that he gave me, and I thought about it for the next few days, and eventually I decided to join the prop desk.
Okay. So let's talk a bit about the interview, because my interview process was pretty interesting back then as a prop trader. So what was your interview process like as a prop trader?
I think the typical questions, like they will ask you, do you have any experience? Have you traded before? How do you handle stress? But one of the key things I think I was being asked, like, what's the trigger that I want to, why do I want to do trading? And my answer was very frank during that time. I don't know whether it's a killer or a break. Like, is it a break? It's a
Deal breaker.
Deal breaker, right? Then I just say to make money. Because during the time my family was having some financial hardship. My dad was going through some bankruptcy filing. And I just knew in my mind I need to make money fast. Right? I need to be sustainable. Then that was the thing I just told my interviewer. I said that I have nothing to lose and I'm willing to give my all for the job. Yeah, and I told them that I actually got an offer, but I still want to go into this role.
It's like between a 6-figure salary offer and something that pays you a few $100 a month with profit sharing, which is more uncertain. You chose the uncertain one, right?
Yes. I think without that family hardship, I would not have chosen this path. I would be probably thought that when you are stable, you want more stability. But when you are a bit unstable, you don't mind. Anyway, it's really unstable. So why not go for that uncertainty? So I guess that was my mindset during that time.
Okay, it's a bit ironic because I'm thinking like I need the money now. I better take something stable to quickly pay back whatever difficulties, finance that I'm facing. But apparently your train of thought was more, since you're already unstable, let's, maybe the instability really made you feel comfortable with this uncertainty. I'm not sure if that played a part.
Yes, I think that also my character. Like all my parents, my uncles, all of them are considered businessmen. In fact, my sis, my brother, all of them are not working as employee. All of them are like freelancer, trader. So my environment when I grew up is, you can say, a lot of us is not like salary mindset. Yeah, I see my father going through all the ups and downs. Despite the downs, I still see his vigor to continue. So I admire this kind of like his resilience. So when I was naturally given a choice between something that's stable and something that I can see, I can make a lot of money and work for myself, right? And it's something that I'm passionate about. I actually go for that path.
Okay, so from what I know, so trading, there's a learning curve involved. Most people, they take like a few years to become profitable. So for you, like, when you started with the prop firm, how long did it take for you to, kind of like grind it out, figure things out before, you had your first paycheck?
Well, I say that, okay, I still remember my first quarter, I made about 9,000. So I did have some background with trading. Like I told you, I attended some trading course. So I have some background about risk management. But one of the things that really what has really helped me in the prop desk is that I learned about consistency and risk management. In fact, when I first joined, right, I remember my boss actually told us this when I first joined. I don't care what you do. Every day you do 5 trades. Round trips, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. Got setup, no setup. You do 5 trades. And each trade you risk $200-$300. That means your limit per day is about 1,000. Then you are out. You'll be surprised, this simple rule, not many people can follow.
Means they overtrade, they undertrade, or they blow up first?
Sometimes they when something go against them, they will say, oh, never mind, I wait. I don't cut first, I wait. Then the thing go lower, then say, never mind, I don't cut first, they will come back. But never come back. Or sometimes they think that, just because it's come back, right? Then next time they don't cut. They say see, every time I cut, they go back. Then next time I don't cut. So a lot of psychological play among themselves. I mean, on the trader's part. And yeah, then you say do 5 round trips. Right? Some people may do just one. Then you ask them why. They say no opportunity. But the instruction is very clear. Do 5 round trips. Got set up, no set up, do 5 round trips. Then some people will ask, then is it like I just anyhow click? Yeah, even if you have to anyhow click, but the thing is that you need to have a basis. Certain basis cannot really anyhow click. Like your basis can be like maybe the price at support, right? Then hit resistance, sell. Maybe the price hit moving average, 20, 50, 100 SMA, 200 SMA. Then there must be certain basis. So there's no exact strategy that we were taught. That was the first thing I learned, and it actually teach me a very valuable lesson. That even if you are given a clear instruction, right, not many people can follow. And you have to, despite all the noise out there, you must be the one that follow the rules.
And what was your ex-boss kind of like the mindset when he gave you all this instruction? What was he trying to see when he gave you all this set of instructions?
After this exercise lasted about a week, right? Then he actually told us that it's not about making money. It's to train you to listen to instruction.
Oh, okay. So you can see whether you can follow instructions. In fact, every day during the first week, we have a debrief every day. Then we'll talk about why yesterday you only do 3 trades and why you cut more than you were supposed to. So there's a lot of key lessons in that 1 week. And subsequently, I think the second week we do the same thing, but we improve. Yeah, because during the time we trade based on the ladders, the trading ladders. So you don't really put a stop loss yourself. Of course, you can using the trading technologies. I believe you use that as well. You can put your stop loss, automated stop loss, but most of the time, in the prop desk, we professional, we cut ourselves. So when the thing comes, you must click. But most people don't dare to click. Yeah. So by the way, what Elson is referring to, the ladder is, they call it the depth of market, where you can see the bids and offers in real time on the futures exchange. I believe that's what you're trading back then. Okay. So apparently your first 3 months as a form of structure in terms of education on how to actually progress as a trader back then for you.
There's no really like formal course, but there was like learning points every day. So there will be debrief every day, and then some guidance on like strategy. Like what should you do when you see this kind of scenario? So we trade many different types of strategy, like directional, spreads. So even in directional, there's other things that you need to know, like your technicals must be tip-top. Of course, the simple things like you need to understand what's 20, 50 SMA. That's like a given. Then you need to know your support resistance. And then when you go deeper, will be like all the manipulation signals like bull trap, bear trap. Why is it that he must go down first before he go up? Don't take things at face value just because the news is bullish, data bullish, you buy, then die. You see, so there are a lot of these sort of things we go deeper. And then there will be spreads. How to do a spread. How to leg a good spread. Yeah, so that was how we get started the first month. Learning about technicalities. Yeah.
Also, this one, they were kind of like teach you all these different overview of these different strategies that you can employ. But
Correct.
they can only, I guess, cover the basic. After that, you have to go into the trenches and figure out all the nuances yourself
Yes.
as a trader. So back then, as a prop trader, what were some of the strategies that you employ back then when you were trading?
I think mainly when I joined 2010, 2011, the algos start to become more blatant. Right.
More obvious, more
obvious.
more active.
Yeah, more active.
If I'm not wrong, 2006, 2007, they were less crazy back then, right?
I was told that before I joined, right, it was very easy to make money.
That's what I heard as well. Okay.
I think when I joined, it's like the algo start to be more and more blatant and obvious and catch a lot of scalpers. Right, it's not as easy to scalp as before. That's why to overcome it, my boss always say you must have train yourself to do position trading.
Okay. Basically holding your trades for longer duration.
To overcome the short-term noise and being caught by the algos. So that was when I knew that you need to adapt to the market. And they always teach us this, like every era has a hero. What works last time will not work today, but in today's market, there will be a set of heroes that will be able to unlock the market. So don't live in the past like you missed the opportunity last time. The scalping market last time, the easy way of just buy and sell off the screen is over. Just like the pit when they traded. Right? When transit to electronic, you need to know what's the rules, and then you as a gamer also, you must know what's the rules and overcome it.
So when you mentioned the algo more blatant, how did that affect your scalping or your trading back then?
When you're doing too low time frame, like 5 minutes and lower, right, and you are looking at the order depth to see like the bid ask, and then you try to scalp the short-term movement, right, it get more and more blatant in a way that there was a lot of spoofing. Right? Spoofing means the so-called the market maker. By the way, market maker control more than 90% of the bid and ask in the market. All of us will know this in the prop desk. So what they do is, and they are the only one who has the ability to spoof legally. Right? So they can actually bluff you. Let's say the market is moving up and then they are ready to come down. What they can do is they can actually put a big size to bluff people that, hey, a big orders is coming in. Then when everyone keep buying, right, and the chart is green, then people see the bid is very heavy. Let's say there's 5,000 lot versus 500 on the offer. Naturally, people think that, hey, wow, a lot of buyers coming. Let's go and hit the offer. Right. Then the market is green candle. So that was when, actually, this is like example, a trick that they try to absorb the liquidity. I mean, people to become sell liquidity. But they are actually refreshing the offers. We call it iceberg. Right? Some of us know that iceberg. Then they will just keep refilling. And then when they are done, they will do a chrome. That means suddenly once they are done, the 5,000 lot will disappear. And then the market will do a blip to catch all the scalpers. So this happens very often every day. Then sometimes you don't know whether it's real or fake.
Because sometimes it could be real also, right?
Sometimes it could be real, yes. Sometimes we say paper order come in. Paper order means the institution order means usually they want to get filled at whatever price they want. Sometimes you see paper order come in and suddenly, hey, what disappear? Market drop. So it get more and more blatant. Like last time when paper order come, they will really push. Then you can follow. But when I joined the time, I think things really get like you can't really read off such a signal anymore. It can be fake. That's when you need. I was told to adapt and do more position trade. Even when you scalp, you do a spread, you leg it in a way that you are positioning. You look at the chart to leg the buy side first, right? And then you see that if you hit the bearish pattern, then you leg the sell side. So you need to use that sense, market sense or skill, right, to overcome the algos to survive.
So for you, you're using both a combination of the depth of market, charts, and other technicals, not just the ladder itself.
Yeah, you
lah.
can't do that anymore.
Okay. Because back then, my early days, I think got some firms where they were a huge proponents of ladder. You just look at the ladder, no chart. So they force them to just look at the ladder. And I guess got to adapt as market conditions change. Okay. So what are some of the challenges you faced as a prop trader back then?
I think the biggest challenge is the emotion part. Day to day, sometimes you can. I've gone through things like days where first 3 days I make money, I can lose it back in 1 day, or 2 weeks I make money, I can lose it in just like 15 minutes. I've gone through such period, and then that's when I question myself, why am I doing this? And especially when I gave up quite a good full-time job to join prop trading, and then my peers who are in, let's say, investment banking, they are like earning big bucks, and like no, they're not taking risks. As long as they're there, they get paid every month. But I need to every day sit there and engage, think about how to fight the market. So that was the tough part. Then I have to always tell myself, like, think of a long term. Like somewhere when first 2 quarters I didn't make more than, my target is 10,000. I mean, that's what all of us join for. Right? I think you need to minimum make at least 10K. So when I joined, I make like 9,000 for the first quarter. So that was like 3K a month. And I was quite upset. I was like, wow, my friend are making like easily 6,000-7,000. I was like, and I spend 16 hours a day. I go through all the emotion. I'm making 3,000. That was the tough part. Then you don't see the light at the end of the tunnel. Man. You need to keep persevere even though you don't see any light. Yeah, that was how I did the tough part, I guess.
So what was because I can relate what you mean by, 2 weeks of gains, then within like a short period of time, boom, everything gone because of human mistakes or error. So what was like your train of thought to kind of like tell yourself to keep on going and not leave prop trading for another job? What was, the thoughts in your head?
I see the long term, and I try to talk to other traders. I think having a community of traders is important. Then I talk to them like, how do we handle emotions? I talk to my boss and hear some of their stories. Sometimes these kind of stories become your winning speech, right? When you succeed.
Sometimes this kind of okay. So when you want to inspire others, you can use this story as like a motivation for.
Yep.
Okay.
So I remember my former boss. He told me he joined the Cymex as a pit trader.
Right.
So I think when I have a losing streak, and then one day I asked him, how do you manage? Then he told me this story. Then I still remember it still today. For the first year when he was in Cymex, before he joined Cymex, he actually saw his friend making money, so he actually wanted to join them as well. So he sold his house. I remember he told us this, so he sold his house, HDB, I think somewhere in Woodlands or Bukit Batok. Then after he sell his house, put the family into a rented apartment, and then he used the money go and trade in Cymex. For first 1 year, right, after he sold the house, the property price kept going up. I think he was very stressed. And then also the 1 year, he don't dare to really trade because he was very new, and then he see all the people like shouting, like then he don't dare to follow them, all this kind of thing. Then first year he didn't make money. He still was so quite depressed until actually told me that he was at the Singapore River there, sitting down there and asking himself why is he doing this? Like he can't buy back the house because prices gone up. After the first year, I think he told me that things have to change. He need to do something drastic. So I think the second year he actually followed the big traders, and he tried to mimic the way they trade and take action. Then second year onwards, things start to improve. And of course, long story short, he's one of the top trader, legend in Cymex. And instead of buying back the same HDB, he bought back the landed. So that was like
motivating story. Yeah?
Motivating story. So when you compare this kind of story and you ask yourself, what is my daily loss like that? 1-2 weeks. This is nothing as a trader. You need to persevere, keep doing the right thing. I always tell myself, like, even if I lose money, right, but if I know that I'm doing the right thing, right, I don't care what people say, I will just continue. Because sometimes you can get affected by your peers or friends or family, right, to actually ask you to stop. Yeah.
So how do you know what is the right thing despite losing money?
I think, like I said, speak to traders. Like sometimes if I have a drawdown, I will talk to traders, talk to senior traders, my boss, and I'll ask them, like, if you were me, will you do the same? right? What will you do in this kind of situation? I always I like to ask them this kind of thing.
Is it like pertaining to like a trading scenario or
Trading
a
scenario.
trading scenario? Okay.
Like those traders who make money, I will always ask them like, how, when everyone is losing money, why are you making money? What are you doing differently?
And they're willing to share, I guess, your colleagues.
Yes, I think that's the good part about in the community. We do share. Then we learn from each other. Hey, he doing the, just now the price action. I shouldn't do this. I should follow him. I can market QA. I cannot keep shorting. He's the only guy longing. And then I need to ask him like, what makes you long? You keep asking question, and then you learn from that. And if you find that what these good traders are saying are all the same, right? Then even if you lose money and they also lose money, then I know that I'm doing the right thing.
Okay. Might it come to a point where, because the market is not very big, then if you guys go in certain amount of size, you guys start competing with each other for liquidity? You know, such scenario?
That does happen, especially as the year goes by, the liquidity start to drop. It came to the point where sometimes there's some tension. Like when we do spreads, right? Like if I want to sell, then some of my colleagues may think that I'm pushing down the market. I got that before. But I always say that the market is dynamic. If someone thinks that the price that I sell, right, is too low, someone will buy. So we cannot, because I scared that I'm going to push down the market for everyone, then I don't dare to sell. You see, then what if I cut loss? Will everyone take my loss? So if you know that the liquidity is poor, then the trader have to make the judgment call whether to even go in the first place. Like if all of us know that all of us go in, the liquidity is poor, then all of us must decide whether you yourself want to go in, knowing that a lot of us may go into the same trade.
Because sometimes it can be have like a meta game where, let's say, liquidity is poor, you're of larger size, you know how your colleague is going to think, right? You can actually cause the market to behave in a certain way such that they think along those lines, they make certain actions and they profit from their losses because it's kind of zero sum, right? So that's how I guess tension would really come about, you know?
Yes, but I would say sometimes, because we trade on individual book.
Sorry?
Individual book.
Okay.
Your P&L is individual, it's not group. So yeah, that kind of tension do happen. Like if you sell, then the thing really come down, the person still holding, then of course he will think that you are the one who push the market down.
Would they know that, like say you, Elson, you're the one who actually caused it, or it's more like anonymous?
Okay, generally it's supposed to be anonymous. Like my trades, my colleagues should not know. But because it's very open, right? And usually person on the left and right will know what you're doing, man. So that's why in the prop desk, the corner seat is the best.
Nobody can see what.
Yeah, the corner, then as the best is the corner, and nobody see. Yeah.
And if I'm not wrong, as a prop trader, you have desk fees to pay as well, right?
Yeah.
What was your cost per month back then?
If I'm not wrong, 1 month is about, I remember I paid 9,000 per quarter.
Okay.
9,000 plus, so it's about 3K.
Sing dollars.
If I know, it's Sing dollars, yes.
Okay.
Was that amount you pay also?
I pay about 2,000. 1,000 plus with 2K. I think, yeah, depending on what software tools you're using.
TT Pro is very expensive.
I think maybe I was using Lite. I can't remember what I was using back then, but I think not more than 2K for my side.
The funny thing is, well, we were using TT Pro, but we were not using most of the function. Just using the ladder.
Yeah. Okay. So I mean, earlier you also mentioned like the markets have actually changed quite a bit over the years, right? So let's say from the time you joined prop trading, then maybe now is like a good 15 years later. How would you say the market has changed over time?
Algo definitely comes in a big way, and then your age, right, on the lower time frame, especially less than 15 minutes, is being eroded to a very high extent in my view.
Meaning that the price action on the lower time is just a lot more choppy.
A lot more choppy.
Okay.
Yeah. So the higher time frame you go, the safer you get. The age still prevail on the higher time frame. So that's the reason why even if I scalp, I do at least 30 minutes. And then I do more of like swing trade.
When you say scalp, means you're close within the day itself, like day trading.
Yeah. If I do 30 minutes or 1 hour, usually will be done within 24 hours.
Okay. So we can talk about how do you then trade the markets today? So back then you were scalping and doing a few other things, but what about now today? How do you approach the markets?
I do a combination of both scalping and also swing trading. And because of lifestyle reasons, I don't want to sit there the whole day like doing short-term trading, because if you do short-term, you need to be there. So I do more like swing trading on the higher time frame, like example, the weekly chart. But to compensate for the low frequency, I do a bigger size. Yeah, if I see a very good set, I may go in a big way.
When you big, is it like percentage of capital is on the higher end of the percentage?
Yes.
Okay.
Like normal trades, I risk between 1 to 2% of my portfolio. And then if I really got conviction on certain things, I may go like 10, 20%.
So what are some of the things that gives you more conviction over the other setups?
Okay, example, if the stock is previously a very hype up stock.
Hype up, I mean like now maybe Nvidia and Meta, this kind of hype up stocks.
Probably.
Okay.
Yeah. If they drop, like a few years ago, like it was Palantir and Tesla a few years back. Then it was very hype up and then it came crashing down, and after I do a bullish signal. So I knew that, some certain stocks, when previously they will have a hype up, and then if the fundamental is still there, and after retracing for 80% or even 90%, right, the chance of a multi-bag is very high, because all you need to do is just to go back to the 30% mark from the bottom, right, is 100% already, a one bagger.
Yeah.
So these are the times when usually I will go in a little bit bigger, right, and then go for that. And I'll try to identify this opportunity once in a while to boost my portfolio.
And this is executed on the weekly time frame.
Weekly time frame, which is more reliable, especially for swing trade, in my view.
Okay, maybe to dive in a little bit deeper, let's say, whatever stock we're talking about. Palantir, it dropped 90% from the high, so now it's just from $100 to $10. And let's say
now it's already recovered to about $20 over.
Okay, so let's say walking through that setup at that point in time at $10, what are the specific things that you look for on the charts before you enter a long trade for Palantir?
Okay, so my main strategy that I employ is called price action manipulation. So I look out for, in generic terms, things like bull trap and bear traps. Of course, I have different special criteria, but to keep it simple, generic form is bull traps and bear traps. So for Palantir, I think back a few years ago when it was around $7 plus, right, there was a bear trap. So bear trap basically means that, for example, this is support. The price break below support. So price break below support may seem like just to cause people to sell, but actually it could be a sign that the market, the big boys or market makers are actually trying to take out the stop loss. Because stop losses that being placed there by the people who are long are usually sell orders. And who's absorbing the sell orders? The market makers will be absorbing if someone trigger below the support. So when I saw that on the higher time frame for Palantir, right, and especially it dropped like almost 70-80%, I told myself that there's a good chance, right, that the so-called the big boys are accumulating the position. So on that basis, I actually measure my risk and I see my risk is quite low versus the 100% mark, $7 to $14, $15. I think the risk reward is like 1:3 or 4, right? And I told myself it's a decent trade setup.
So I'm just going to try to paint the visualization picture just to make sure I understand correctly. So let's say Palantir goes up to a high of $100, goes to a 90% drawdown to $10. For that bear trap to occur, it needs to go into like maybe a kind of a range where we consolidate so they can take out the lows of that, the recent lows. And then if there's a bear trap, you look to go long.
Correct.
Okay. Then where would you then typically set your stops and target?
I usually put it at the immediate swing low.
Okay, so just before the low of the bear trap that just happened.
So let's say this is support, the price goes down and goes back up. Then I'll put it just below where it last visited that level there. Then I measure my entry, stop loss, then project.
Okay.
Then take profit target. Usually I like to, for this kind of trade, I like to exit based on discretion. So discretion means I don't just put a take profit like 1:2, I just put it there. Because I find that when I'm doing this kind of trade, I don't want to shortchange myself. What if it can go higher? I want to see the potential. So I will wait for it to move until maybe it hit a resistance, or you do what we call a flush. It means big green bars. That's where I will look to sell.
Okay.
And sometimes, even though these two scenarios occur, I may not sell because if the stock have not recovered 100%, I will not sell.
When you say recover 100%, are you referring to the all-time high that was being made? Or 100%
from the lows.
Or from the lows.
Because then when you drop 80-90%, right? Like let's say the low is $7. I'll tell myself, since this is the 80-90% low, if I'm right and it rebounds, it should go to 100%.
Okay.
It's the same mental model I have for crypto. A lot of times, a lot of crypto, like now, a lot of crypto drop 80-90%. And when if I'm long, I'm not going to take 50%. Because if I'm right that this is the bottom, they should 3-5x at least.
From the price you entered lah.
Yeah. Then around the 3 to 5x zone, right, I'll look out for resistance level. Then I'll draw my lines there and I'll look out for exit over there.
Okay.
Like if the line is at 50% mark, I will ignore that line. Basically, that's what I meant.
Okay. And does like volume do you take into account volume when you are, trading in this manner?
Okay, volume is like initial screener, right? A volume will affect the liquidity of the stock. So I like to go for stocks where they have at least 100K average volume. So that like there's interaction between the market makers and the retailers.
Right.
And usually this will affect the bid-ask spread. If the liquidity is like let's say less than 100K, right? Usually the bid-ask spread, you will see that it's a bit wide. More than 5%, which is not very good. We usually want to keep it below 3%.
So for this setup that you share, I can imagine that it can actually be used in many different situations. Like the one you just shared is the stock price having like a 80-90% drawdown. Alternatively, I'm thinking you can even use it as a counter trend trade where stock price retests maybe the all-time highs and then gives you like a bull trap, for example. Or maybe a stock is trending up higher, it goes into a range, can have another bear trap while it's trending up. So I guess there's many different scenarios where this particular strategy that you just shared can be employed, right? Depending on the market conditions or the stock that you want to trade.
Correct. So
Quite
this is
versatile.
So this is one type of so-called scenarios I like, because this is when I can go for multi-bags.
Okay.
This is like so-called my ideal multi-bag scenario. Of course, I cannot just wait for, when you catch fish, you throw the net. You cannot just say, I only want that fish. So when you throw the net, you will have many other fish on the net. So I also look out for other kind of scenarios like the normal continuation trade. Buy high, sell higher. Because sometimes you don't always expect things to always drop 80% and wait for you. Sometimes when market is in a full-blown bull run, like currently right now, in the kind of like 80% drawdown and then we bottom out scenario get lesser and lesser. So it's like also a season. When the market is retrace, then you have a lot of these kind of scenarios. When market is in ongoing bull run, you will have to stick to the buy high, sell higher kind of setup.
Right. Okay. And maybe back to prop trading, I was wanting to ask this question because I myself, having left the industry, I've seen quite a number of traders who actually quit trading altogether. Some maybe even become taxi driver. I was wondering, do you see something similar at your end?
When I was in the prop desk?
Yeah, like people just leave trading altogether. They don't trade anymore.
Yes. In fact, I think most of us still go into this line, like trading or investing.
Okay, still in finance related.
Still in finance related. Just that whether you are the execution role. For me, I would say being a trade, if you leave the prop desk and you become an independent trader, you are still a very direct execution role. Some of them became order execution. Yeah, order execution role in the bank. That means they take orders, they take instruction, then they execute. They don't take proprietary trading kind of risk. Another type is they just purely do risk management. I have friends who, colleagues, before they left, I asked them, what are you going to do? What are you going to do? They told me, I'm going to do risk management in the bank. And what's the reason? I'm tired of taking risks. So you're tired of taking risks, you want to do risk management.
So risk management and trading is two different things, right? It's not even related to trading anymore, I thought.
I think it's not. You can say somehow it is also related. I mean, you help the bank to control risk, but you're not taking risk anymore.
Okay.
But you're a trader, you control risk and you're taking risk.
Okay. So yeah, this will be an interesting one. So again, this is a tweet that I read from Adam, right? He said along the lines of, he left the firm to trade his own money, right? So since then, he has made over $6.5 million in trading profits, trading the futures, forex, and crypto. Sounds like you actually make more money now on your own rather than back then as a prop trader. So maybe could you walk me through some of the trades or investments that you took, right, previously that led to this amount of money that you've made?
Okay, when I was in the prop desk, I was there for 5 years. In total, I made about $1.2 million, of which I take half.
So it's just 2.4, like if you calculate the 50%.
Maybe the revenue is 2 point something because, our margin is actually, when we are doing a shorter time frame, you could be making 3,000, but actually your net profit is 1,000 because of all the commission.
Right.
Probably I made like 2, 3, but the net profit is about 1.2. Then of course the 1.2 you need to split with the company 50-50.
Right.
Yeah. So on paper I probably take home a 500-600. Even though I maybe make 2 million or more.
So of course all this costs that you have to pay along
Yes.
the way. Okay.
Yeah. So that was the first 5 years. Then after I left the desk, of course I don't have to pay that cut anymore, and I was doing it on my own. And that was also during a time in 2016 when the crypto market started to be awakened, right? And I got a lot of friends, and even prop desk traders. I don't know why, but a lot of prop traders like crypto market. They kind of speculation or drive speculation, and that kind of thing you can't find in the futures market. You found it in crypto. So that was when I started shift bit by bit slowly to crypto, and I realized my first 3 months of trading crypto, right, doing swing trade, I started with like 30,000-40,000. I turned into 200,000, and I was like, oh, that's like everything I buy is like boom, multi-bag, and that was when I can sense that the wave is coming. And that was when I positioned more towards crypto. And good thing is, luckily I have the background in trading, so I can roughly see like where's the entry point, exit point, do some risk management. I didn't really get burnt out when market crashed, fortunately, in the last few cycles. But I always tell myself that it may not last. That's why I still do trade a lot of stocks. I try to balance both sides. I still trade Hong Kong stocks, US stocks, crypto as well. When I see the crypto market is going down, I will trade more US stocks. When I see the crypto market is going to boom, I will trade more crypto. So that this is the like 2 asset class I manage. Yeah.
Okay.
And then like in the after I joined after I left the prop desk, I made about $10 million in crypto.
Was it more of from investing, or was it more of position trading?
I think a combination of both. Sometimes I may enter based on investment, right? But when I exit, it's really 100% pure based on technicals.
Okay.
So even if I like the token like Bitcoin or Ethereum, when I see the pattern, bearish pattern forming, manipulation pattern forming, I may exit before my intended target. Like I always tell my students, like Bitcoin, my target is 200,000. But why do I sell when last time it was 20,000? Why do I sell when it was like 70 over 1,000 recently? Because I saw the kind of pattern there, like bull trap, bearish pattern. So sometimes you have the fundamental target, but my technical sense will override the fundamentals.
Okay. And you probably look to re-enter maybe at a later time at a better.
Like now.
Okay. Okay. So we'll get to crypto shortly. A lot to talk about it over there as well. But maybe back to trading for a while. What are maybe let's say someone who wants to get started in trading, what advice would you give to them? Or what would you give your 21-year-old self when you wanted to trade back then?
I think it's important to have a low maintenance lifestyle. You must be able to sustain and cannot have too much worry that you need to pay a lot of bills. And there's a lot of sacrifice to be made. I mean, you cannot be... You just need to... You must keep a bare minimum lifestyle so that you can free your mind to focus on trading. I've seen some people where they have a lot of burden, family burden, financial burden, they have to pay the car, then they have to trade. And that's when they really can't focus on. Yeah, so don't just quit your job just to switch over entirely as well. Make sure you have savings to tie you for at least half a year.
And any trading books that you usually recommend traders to go and read?
I think a few books that still stuck with me is Big Performance Trading by Kyung Hee.
Wow, that's a local book. I think I have not read that one. Okay.
So he was with Adam last time. He traded mainly on the forex. So he does the forex course. You may not find his book anymore in Kino or Popular. I guess it's out print, but maybe you can find it online. Big Performance Trading by Kyung Hee.
That's a trading psychology book?
It talks about forex trading, but the principles can be applied to whichever asset class.
Okay.
That has been still one of the best book I read.
Okay. Big Performance Trading by Kyung Hee. Is he still actively trading around? I haven't heard of him.
From what I know from Adam, he really left Singapore.
Oh,
Yeah.
Okay. So yeah, let's kind of move on to the next section. We will talk about crypto, right? So you have this course, right, called the cryptocurrent. Yeah. So earlier you mentioned how you got started in crypto was because I think after prop trading, it kind of reminds me when you said that the crypto markets reminds me of like back then. I think Nikkei futures before the algo come in. It seems like the market were very similar. Like it's not so sophisticated,
It's a
right?
bit cowboy.
Yeah, which is what crypto was like in 2016, 2017. Yeah. So okay, so there are like so many crypto tokens being launched, right? So how do you then go about deciding which are the ones that are worth investing and which are the ones that just stay away better?
Okay, in crypto, we always say that we see what drives the narrative. So I don't really have maybe this season I could be metaverse. The next season could be AI. Then maybe next season could be RWA, real world asset. So I try to be go in before the narrative starts. So that's a key question. How do you know a narrative is going to start? So I always have this so-called theory lah. Every dog has its day. When something is the top of the town, right? I don't touch one.
So like now popular is AI, real asset or memes, you will not touch on this.
I will not touch. Okay. Like you tell me like I think the last few weeks meme coins was pumping or what, I will not touch. Because the real money is made before the attention come in. When something comes in, right, you need to have that resilience to stay away. Then you need to the best you can do is to look out for the next one. Because after the meme, there will be something. There will always be something. It's just in the stock market as well, right? Previously was like, I think many years ago was like marijuana stocks, cannabis stocks, and then there was like EV, and then metaverse, then now AI. But all you realize all after that will die on. Then maybe after a few years it will come back. So every market has a theme. But the theme cycle in crypto is faster. The cycle change very fast. Like maybe these few months are metaverse, then next few months AI. But stock market maybe take 1 year to realize that theme. So crypto is a much faster game in my view, which is good if you are really into speculation. You want something fast. Then how I look out for narrative is I will see what's happening in the last half a year, 1 year. And if these are a theme that has really came about in the last half a year to 1 year, then I will not touch. I will position more into themes that are still under radar.
So those tokens that are under the radar, I'm guessing their price actually will be like just consolidating, very quiet, like an ER patient that almost dying, then not really moving much.
They go for the leaders. Sometimes the people like to go for the best is always go for the top 3 or top 5 of that leader in the category. Then watch for the any bullish signal. Yeah.
So is there like a tool or screener that can help you screen for such tokens that you're looking for that's under the radar and then they are still like the leaders of that category?
I don't really use a screener, but I use like CoinGecko, and then like when you look at certain tokens, they do categorize them. Like say this is a decentralized exchange. Then you just click inside, then you see they are sorted out based on the biggest market cap to lowest market cap. They just focus on the first 5.
Okay.
See, then I'll go to the chart one by one to see if there's a setup.
Okay.
And then if I buy it, I'll just tell myself that I have something in this category. Then I want something in that category. Then in your portfolio, you can have different themes that you are going for.
Do you take into account the fundamental of the tokens, like the tokenomics, the team behind it, or just more of a technical play?
Usually, right, the top 5 will naturally be the ones with better fundamentals in the category. The natural selection really, right, is already done. But I look out for red flags, like, is the team anonymous? I have a few occasions where I remember even some of my friends got into projects where team can give 1,000 excuses to be anonymous. They say that they are from China, they don't want to reveal themselves because they scared China government go after them. 1,001 excuse. The one lesson I learned, don't care what is the excuse, as long as they are anonymous, is one major red flag. Except for Bitcoin. Right? Bitcoin is anonymous, but Bitcoin is a different use case. It's decentralized and it's been proven. There's no project to be done. Bitcoin has no roadmap. The roadmap is over. But for projects that are asking for your money and their roadmap is not done,
And they're
that's where the
anonymous
risk
some more?
is. Yeah, and they're anonymous some more. It's not proven yet.
Okay. So then after that, when it comes to technicals, again, you can use your similar setups which you've shared, like, the bear and bull trap to, get an entry to go long, stops. So a lot of the principles they share is actually very applicable to the other markets out there.
Yeah, correct.
So what are some of the maybe upcoming trends that you're seeing in the crypto space right now?
I think AI will come back. Okay, the reason is because in the stock market, AI narrative is still not yet dead, in my view. You see Nvidia is still all-time high, even though it retraced a little bit. And it's like the driving stock for our sector for the entire stock market. In fact, I think I read one of Adam's video, like AI stocks is the one that drive S&P 500 to all-time high. So if that is true, right, then even though crypto market, AI crypto came down, which they did in the last few months since March, they dropped about 80-90%, most of them. I do see that there could be a convergence back. That means some of the crypto AI tokens may do a catch-up, bounce back. They dropped mainly because of the overall macro environment in crypto. But the team is still there in the stock market. So the AI team is still not yet dead. Unlike last time when the metaverse, right? When the metaverse hype comes in, a lot of meta stock like Roblox, all these kind of stock, right? They actually went up together with crypto metaverse stock, crypto metaverse coins, and then they died together, and that's where the wave is gone. But this time around, in the stock market, the AI stocks are still holding. That's why there's still a chance for crypto AI to rally.
So crypto is kind of like taking lead from the traditional stock market lah. As long as the traditional stock market, the hype is still there, there's a good chance crypto could come back from the dead and catch up with it.
Correct.
All right, that makes a lot of sense. Okay, so if you don't mind sharing, what are some of the coins that you're holding now, all right, and why you're holding them?
Okay, for about since March, right, I position more into big caps for stability.
So how you define a big cap for yourself?
Okay, actually March I cashed out about half of my portfolio, and I position more towards big caps like Bitcoin, Ethereum, XRP. These are the safest picks in my view lah. And then I still hold on to like other smaller tokens like Blue Marine, which has dropped like 80-90%. Just a very small portion. I cash out 80% of it. I'm still looking to go back in. Okay, because it's backed by a lot of big players like Coinbase, Venture, all these are inside. I think KuCoin also inside. Yeah.
Okay, just a quick one. Do you know that you can download the transcript of this episode? This way, you can easily recap the lessons and insights of this episode without having to listen to it again. And that's not all, because you can also download the transcripts of all my past episodes and quickly catch up on what you've missed. So if you're interested, go down to raynerteo.com/script. Script is spelled as SCRIPT. So once again, it's raynerteo.com/script. Now, back to the show.
So what's your take on like this cycle? Do you think it's the top is already in, or is there still more room to grow for next 6 to 12 months? I mean, more room for price to go up higher.
From what I see right now, the price action of Bitcoin is on the higher time frame. It does a very big bull trap.
Okay. Because it retested the all-time high, it's hovering there. Okay.
And the last few weeks or months, they couldn't hold above. So when you try to can't hold above, right, high chance it may retrace back, which is doing it at the moment right now. So I suppose it may drop back towards 50K level. And this drop, the thing is that I think if you're holding on to Bitcoin, Ethereum, if you have a longer time horizon, it should be okay. But because of the drop in Bitcoin, Ethereum, right, the odds will suffer further because usually liquidity gets sucked out of them faster than the big caps. That's why even that's why how crypto traders position themselves during a bear market is not really to sell or everything. Yes, you can cash out, but after you cash out, you reposition to big caps. That is like the play lah.
Okay.
Yeah.
Then like Bitcoin, Ethereum, I guess you do believe in their fundamental or the utility behind these two tokens? Or what's your take on Bitcoin, maybe long term?
I still maintain my target price of 200K and above.
What's the reason for like 200K?
I did a valuation comparison with gold. Okay, so Bitcoin is created to disrupt gold. So that's why you use it as a comparable. So I think if Bitcoin hit about 200K, Bitcoin hit about 200K price point, right, that will be about 30% of gold, 30% of gold, if I'm not wrong, based on my last calculation. So there's still a long way to go actually if it were to replace gold eventually. Then like Ethereum will be comparable to Microsoft because Ethereum is like the operating system for crypto. Microsoft is like the operating system for the real world. So that's how I compare them. I compare them with the real world stocks.
Okay. Are there any like maybe smaller altcoins that you see that there's a real world utility, like solving a problem in the real world, which you find that there's certain prospects in these tokens?
I think the next one will be XRP.
Oh, Ripple. Okay. Yeah, actually, I think I read somewhere you had a 40x investment in Ripple, right? I don't know whether the source is reliable.
Ripple is one of my like bigger wins back in 2016.
Okay. Could you walk me through maybe that trade or investment that you took? How did that come about?
I remember when I went to reservice during that time. And one of my very good friend, he's a visionary lah. I have to say he's someone. He doesn't come from a very big, very glamorous corporate background, but he's a big thinker. Back in 2016, where everyone was like, still don't trust crypto, all this, right? He actually one day I remember in camp, he actually told me this, sat us down, a few of us down and said, bro, listen to me. There's this token. You must go and take a look. This thing called XRP. This will change the world. And I look up to him because he's our CSM.
Okay.
Yeah. So, and I know that he's someone who do due diligence one, right? And that's when I go and take a look, and I find that actually the potential is huge. It's disrupting the way remittance company, banks they have their nostril account, right? They have to park money here and there, and then XRP is going to disrupt all these liquidity pools. This is going to be a game changer, right? Because trillions of dollars are moving every day. XRP just need to take like 10% of what Swift is moving, and it will be $1 billion crypto. And with that conviction during that time, that was when I remember for like a good 1 month, every day I go inside Coinbase, right? I buy to the max.
You mean there's a limit you can buy each day back then?
Yes, I think like one day maximum of $300 only. Then you refresh by itself.
Okay.
So every day you go buy max. Then you even have to use borrow friend
account,
father mother account to buy.
Yeah. So that was the story. Was technical involved back then when you're buying, or it's more like fundamental? I think it's going to disrupt, then let me just buy.
This one was purely fundamentals.
Okay, you didn't even care about the technicals, you just
because it was so dirt cheap, in my view lah.
What was the price back then when you were buying every day?
0.0000 something. I think like 4 zeros, 30 or 40.
Okay. And let's say you buy, then because back then so small, the price can just dip 40-50%. Does your conviction still remain when such drawdown occurs?
Okay, I have to admit that during that time I told myself I would lose everything.
Oh, that's your mindset you had already. Okay.
Either zero or to the moon. Yeah.
Apparently you hit.
And also I trust my friend. Because he has a lot of, like during the financial crisis, he bought one stock. He put 3,000 and it turned into 200,000. Like so he's the kind that he has his own way of thinking, and his story also inspired me lah. So I look up to him a lot. Yeah,
that's amazing.
He's a very different view of the world one. Like he don't really go by the normal way, and he has always every time I ask him for his views. And every time we meet up for coffee, he always share with us like what is the key things that he's looking out for, and he's now like semi-retired. Yeah.
Great. So okay, moving on, right? So let's maybe jump a little bit and move on, talk about the education part, because I believe you also have a education business, right? ex-SPY trader. So how did that come about?
So 2016, after I left, and I was given an opportunity by Adam. Right, I was actually one of Adam's student as well. Then I told Adam about this. Adam asked me like what I do in the prop desk, and I during the time I actually shared with him that like what I told you, like things that we look out for, what kind of strategy we use in the prop desk. And he told me that it's something very interesting. Why not you do a course, right? And I'm sure a lot of people want to attend, even him himself. I still remember during the time, Adam, my first course that I conducted. Actually, I personally have reservations also when I started. I was like, last time my mindset not very strong.
Your what?
My mindset not very strong.
Okay.
So I was like, will people listen to me the early 30s? But Adam is the kind that, everything is possible. And I actually remember him telling me this. I said, telling me this, it doesn't matter how old you are. You got the skill, the substance can already. And that was like, okay lah. Then I need to give value lah to people who actually learn trading from our course. I still remember I do the course and Adam personally attended for 4 days.
Wow.
And it's not like he come and go. No. He sat there in the morning until the last day. And his secretary actually told one of the directors told me that he asked his secretary to block out the 4 days. Then during the time he was flying like 1 week, like I heard he was flying like 3-4 times like around the region. But he blocked out the Friday, Saturday, Sunday, Monday just to attend the course. And that was to me a super good, great honor. Because I learned a lot from him. I look up to him a lot. And that was how I started. And after the first class, I was like, actually I enjoy doing it. Then that was when I have an arrangement with Adam to come back to conduct it every 3 to 4 months.
I see. But right now, is it more of back then was physical, right? But right now, is it still physical or is it more of like Zoom already?
Now we do, during COVID, until now we do more on Zoom already. Because now we have international students who cannot attend physically.
Okay.
Yeah. But before that was physical.
And back then when you have your first batch of students, you have to create the materials from scratch, right? And then someone who's a trader now becoming an educator. How was that transition like for you? How do you even get your materials ready? How do you even know what should you say, what shouldn't you say in your teaching materials?
I just do what I think as a student I want to see. I always ask myself when I do my course material, if I'm a new trader, what I want. I don't want to have all the theory, right? I want give me the chart, the strategy, show me the chart and where you enter and stop loss. So when I conduct my course manual, like most of it is charts and very little theory. Because I know people don't want, you can talk all the theory, but in the end, their back of the mind is tell me where to buy.
You're right.
Where to put the stop loss. In what scenario take profit. Then different scenarios. And that's how my approach when I do the course manual. And of course, Adam gave a lot of advice. Like sometimes he will tell me, hey, too complicated this one. Like, why you too long-winded all this? Then I will change. Then sometimes he may tell me maybe you can express it in different way. Because sometimes a cup, a glass, half full, half empty. Instead of sometimes you can say it's half empty, you say in another way it's simpler. So Adam is he's someone who can break down very complicated concept into something simple. And I learned a lot from him on this education. Yeah, and he always tells us that sometimes education is not just about delivery of the content. Because as a teacher, as a content creator, you also need to entertain.
Yeah.
Right. I mean, content anyone can go and find, but sometimes people want that entertain. So sometimes I always when I train my students, I do relate to them, like my experience in the prop desk, some stories, make it more interesting and more they can relate. Yeah.
Yeah, that's why they have a term for it. They call it edutainment. It's a teaching plus entertainment combined together. So you have 4 days of teaching. So maybe you can walk me through briefly what is covered in each of the 4 days. Because 4 days, most people think it's a full day if I'm not wrong, right? 9 to 6, that kind of hours.
So now it's over 2 weekends now. So Saturday, Sunday, I'll be personally conducting the 4 days. It's from 10 a.m. Singapore time to 3:30 p.m. Singapore time.
Okay.
Yeah, over Zoom. But we have 2 half-an-hour break in between. Lunch break.
Okay, for lunch break. For all 4 days is the same lah.
Yep.
Okay, so I'm guessing it's going to be day 1 will be covering the basics, the foundations.
Correct.
Cover the strategies, then there's risk management, the psychology. So all in all, about 4 days.
So first weekend will be more on the introduction, and then we'll cover just one strategy, and then we'll cover screening. Yeah, enough for them to get started. So the 1 week break is actually for them to catch up on the content.
Meaning those who didn't manage to attend live, they can catch up on
I
their
know,
own?
like the first weekend, right? The things that we cover, let them digest during the week, the 1 week.
Okay.
Because on the next week, Saturday is more on strategy, and usually students who are very new, they may struggle on the strategies day lah. That's why I always say that the 1 week is for them to catch up. Then that's where we find that it's much better based on our feedback for most students. And when you go to strategy, I can skip a bit of the basic already, right? I go straight to the charts and I'll just tell them like in this kind of scenario, the confirmation signal, all these I'll buy and sell, all this kind of thing. We can just go straight to that without going too much back and forth on the basic anymore.
Okay.
Yeah.
So for this one, you say you work with Adam to help promote the business. So how is the marketing done? Is it like handled entirely by their team, or do you have any marketing that you do on your own as well?
Yeah, so I don't really do the marketing on my own except creating the marketing videos, right? So marketing side, like what you see in social media, YouTube, Facebook, is done by Adam's side.
Okay. And you prefer it this way, like you don't have any plans to maybe set up your own YouTube channel, your own Telegram channel to kind of like get more reach organically?
I thought of it before, but I find that it could be a very tedious process and I want to focus more on trading side.
Makes sense.
Yeah, it's like I'm trading both stocks and crypto and I need to coach my students. If I have to go and focus on, there's just too many things on the plate and one of them was sacrifice one. So my passion is still mostly on trading. In fact, I still trade very actively, even till today. So I still want to focus on this like trading side. Yeah.
And then now that you're no longer with your peers in prop trading, then how do you get this kind of like community or camaraderie that you used to have, whereas now you're trading independently on your own?
I think there's two groups I get this kind of vibe from, like same for Adam, like when we meet up, I can tell our whole conversation during lunch or dinner, right, is all about trading, investment. Right? The whole conversation during lunch is all about that, which is our passion. Then we can get ideas like what Adam would share about what he see, what's his view on the last few months, right? Or upcoming, what do we think he thinks is going to matter to the markets? Then I will share, and that's where we learn from each other. And also sometimes we have certain struggles, we also share each other lah. Then of course Adam is the big brother in my view lah. So if I have any issues, like I will always ask him like, how do you deal with it? That's the way I actually learn also. Like, hey, Adam, when you face this kind of scenario, how do you deal with it? Yeah. I'll ask him. Then he always give very good advice lah, through his experience. Then another is my students in the community. I do a monthly gathering every month.
Physical Zoom or Zoom?
Zoom also.
Okay.
In fact, I can tell you most of the time, like last time when I'm on my own, right, I'm alone, I need to screen on my own, like find opportunity. I see the world maybe this in a very narrow way. Okay. But when in my community, sometimes some of them may be exposed to different sector. Then during the gathering, they may ask me about stocks that is from another world. Hey, how about this token or crypto token? Or how about this stock? Then that's where sometimes I get ideas from there. In fact, during my gathering, right, I have a piece of paper. When students ask about a stock, I see straight away. I write down first. I'm learning and teaching at the same time. That's where I get my ideas, and in fact, I think nowadays most of the stock I enter is what I share in gathering or what I share with what my student has shared with me before.
So it's a win-win for both.
It's a win-win both. Yeah.
And also, I think I noticed on the website you have this price action manipulation course, right, which has two parts which are sold separately. So I'm curious, why not sell it like part 1, part 2 together, bundle it as one, rather than separate like level 1, level 2?
It's actually sold in PirahnaProfits.com website, right? For the price action manipulation course,
I think
level
so,
1 and
that's
level 2.
what I saw, yes.
So students can purchase as a bundle or a la carte.
Okay.
Level 1 or level 2. Okay, you need to have level 1 before you can enroll to level 2.
Okay.
So level 1 actually is enough for you to get started, because we teach you the basic and then screening, executions, and 2 strategy and risk management. You can get started on without level 2. But if you want to know how to tackle different scenario, because in the market there's sideways pattern, uptrend, downtrend continuation, look out for ultimate tops, ultimate bottoms, and scalping. I do cover more on that on level 2, in level 2. Yeah. And other different strategies also.
Okay. So level 1 is independent on its own, but level 2 is more the advanced stuff if people want to cover different market environment situations. Okay.
Yeah.
Okay. And also curious to hear, why do you then want to teach, right, when you clearly have enough to retire? So for me personally, it's more of like, number 1, make more money teaching. Honestly, number 2 is diversification, and number 3 is it was very fun actually when we're engaging with students and doing videos. So, but curious to hear your point of view for yourself.
Yes. Initially, I didn't really talk too much about money with Adam at the start. In fact, I think we never brought up about the money. I didn't even know how much I will get. I was just like at the start, I'll just do our passion. How much I get paid doesn't matter. Up to today, I never talked to Adam about what's the cut. I never argue like, hey, I must get this percent. I never talk about that. It just come naturally based on industry standard. And I always tell myself that I cannot focus just on the education part, right, for revenue. I focus more on the trading side. So of course, if I were to do this, it still has to be a business that is profitable for Adam and also for myself, for my time, right? But I'm not relying just on this, because I think that if I rely just on the education part for survival, right, it may kill my passion in trading entirely. You see, I may not hone my skill set as profoundly as if I were to just focus on teaching.
Because your time will be diluted between education and trading.
Yeah.
So towards now we can move on to the closing session. I think I read this somewhere again. Adam pretty much, I think he thinks very highly of you. So he says something like, you've built a $15 million property portfolio with your trading profits. So how do you then go about, building your own property portfolio?
Actually, it started off with this thing. Adam always say, like in education, the tough part is not to get bored.
In education, the tough part is not to get bored.
Because you're repeating the same thing.
Oh, okay.
Sometimes you can repeat the same answer, right? And I asked over the years, I have a passion on property as well. Right? In fact, I have a RUS license, CA license.
Means you're like a property agent that licenses it?
Yeah, but I don't practice on. You will never find any my face anywhere or any transaction. Yeah. Even I buy my own house, I don't get anybody. I mean, I don't do myself.
Or you get someone else to help facilitate.
Yeah.
Okay.
So it's just out of passion. I just want to learn more. Because I think it's a big ticket item. So I want to know, I don't want to just everything delegate, but I still need an agent to execute, but I want to know what's happening. So I bought my properties during COVID, where I see the opportunity. And I was inspired by my former boss as well.
Which one? Is it the one at trading or the one at
trading?
Or trading.
So he built up a sizable property portfolio as well. And it was also very inspiring. He said using the trader mindset also, like he bought, I think, landed properties, shop houses during the financial crisis. And he shared with us, like casually last time, I still remember, like he bought something for like 600,000, the HDB shop house, now it's worth 2 million. Or the kind of story, really inspire you, And then he's the kind that will humble you also. Like, he will tell you, like, when you make money, invest in property, don't anyhow spend, this kind. So I learned that kind of values from him also. So when opportunity came in 2020, right, the crisis, I actually went in to buy 2 shop houses. So it's currently tenanted out. As a side business, I actually operate one of the shop houses. I'm operating a hostel. Just started, but I'm just overseeing everything. So I just leave it for investment.
So you collect the yield plus capital appreciation for the shop house.
Yes, yeah.
So do you get to be the one managing the tenants, and stuff like that, all the drafting of all the agreements?
Yeah, so fortunately I got the experience in real estate. So my tenants direct to me.
What does direct to you mean?
That means they if there's any like tenancy agreement, I do myself one. Like I draft the tenancy agreement for them to sign.
Oh, you don't draft it up? Okay.
Yeah, I draft it out myself. I don't go through like another agent, or let's say there's some issues with the roof or anything, right? They come directly to me. And then my dad is a contractor. So it's very easy. The handyman, just call him down. Because sometimes I feel that if you have to go through an agent, like, wow, the agent has to go and find a contractor, then they'll give you quote. Then you go and tell the agent, then you don't know whether the agent go and tell the tenant, then you always do that kind of miscom or delay in. Sometimes they just call me directly, I'll just settle it straight away.
But why shop houses instead of like other type of properties out there?
During COVID, I remember I read an article. You know, Bitcoin is scarce. 21 million Bitcoin.
Right.
And the scarcity is the reason why it is so available. So I saw an article, I was like, this is like Bitcoin also. Like heritage shop houses, commercial shop houses, there's only like 6,000 in Singapore. Government cannot build more. They are conserved. Most of them are conserved. The conserve means if today the government want to tear down, it is not so easy. They have to go through. It's not like the SLA issue you a directive, Land Acquisition Act, and then they can just take. It's a law that they cannot take on actually. Even if they want to build MRT, they have to build around it.
Wow, so powerful then.
Yeah, because some of them is like pre-war.
Oh, okay.
So it's like it's a property and also a antique.
Am I right to say like along Joo Chiat, I noticed shop houses, some of the design very similar. I guess those are what I mean by the preserved shop houses.
Correct. So I have one shop house in Joo Chiat, tenanted to a pet shop. Yeah, I think it's built pre-war also. And I don't know how it survived after the war, but the building is still there. So there's the kind of like vibe, the vibe, that a lot of investors want to buy this as an asset.
Okay.
And you can rent it out for a renter.
Or you can even choose to stay if you want to.
If it's a full commercial, you can't really take it as a residential. But you want to stay is up to you.
Okay. From what I see, you're actually someone who's actually quite amazing. You have a very open mind. You're willing to go into crypto, trading, now property investment, and then I think your open-mindedness really brought you to very far places, right? And of course, clearly achieving the success if you have today. So what are you excited about right now? Personally or professionally?
I would like to continue to do my education part of the business, and moving forward, I look forward to getting my house soon. I actually bought a place at Ang Mo Kio. So that was, I think, the next milestone for me personally. And of course, to start a family by next year.
Right. That's a game changer, man. So I'm curious. So let's say, you have, of course, a huge lump sum of money. How do you then allocate, decide, okay, this one goes to trading, this one goes to property, because I think some people, they diversify. So what's like a percentage that you are comfortable with your managing of your money?
For trading side, I allocate about $1 million. I think that's a comfortable range. And whenever I make money from trading, I will just take away anything beyond that 1 mil mark. Because I don't need too much to engage the market. And I think that will be beyond my comfort zone also.
The dollar amount of money that's being
deployed.
Okay.
So if I make money, I would, like during COVID, I just cash out.
Okay. And just keep that size at 1 mil.
So I constantly know that, I lock in the profit. So actually, whatever that's in my portfolio right now is all pure profit.
So in other words, actually, you can actually make more money in terms of like percentage return, because trading is definitely more than, I think, property. But because of, I guess, being comfortable with, what's at risk in the market, you'd rather choose to make less but still sleep better at night. That's what you're saying.
But I would say that it is still, when I see a great opportunity, I can so-called go in much bigger if I want to.
When the opportunity arises.
Like similar for crypto, if I really see everything bottom out and things is going to move up soon, in my view, right, I will still go in a much bigger size.
Is there maybe a percentage where you feel that that's like your hard stop limit, like maybe not more than, I don't know, 50% of your wealth in the financial markets? Do you have certain percentage in mind that you've your hard stop limit?
Currently, I would say that property is about 80% of my net worth. Less than 20% is in crypto and also stocks. Among them, I don't go beyond 20% in the portfolio for every even for a big position. So that is my hard stop. If my portfolio is about 500,000, then the stop loss for that particular position, if I really risk big, is about 50 to 100K.
Okay.
Crypto sometimes can, crypto also, like if I go into a certain position, also about 50 to 100K per position.
So at this stage, it's unlikely to have the case of, let's say, 40-50% in property, then the remaining 40-50% in the financial markets. That would be too much for you at this stage.
Actually, also because naturally the property valuation move up, and because it's leverage instrument.
All right.
But to me, I don't see them as together. I always see them as separate. I focus on the portfolio in stocks and crypto, and at any point of time, if the opportunity there's a lot of opportunity, then of course I may using my cash to pump in more. And because it's also, even though I got 1 mil, but it can also be leveraged if I want to.
True.
Within the account. And I'm a kind of person where I like to go for small risk, big gain. Yeah, calculated risk, small risk, and then go for big gains. So I don't really need that. I can just use 200K to make 1 or 2 mil. That was how I started also, like crypto. 40K and then turn it into 2 mil, and then over the years I started to build it up.
Because I also have this thought myself, because I don't have, besides this flat, right, I don't have any other property. So a lot of my money is actually in the financial markets, trading, investing. So I'm thinking, I might need to diversify away instead of having so much of my eggs in that one instrument. So that's why I asked you the question of how were you going about, managing your money across these different asset classes. Yeah. But I think the biggest risk to me is one black swan event, and it's more, when black swan event occurs, the correlation of markets can just all go to one. I'm like, I'll be screwed big time, when that happens. So yeah, I need to think about it myself. So what does your daily routine look like right now?
Daily routine, I trade mainly the US market. So the US timing, I sleep a bit later, maybe 2 or 3 o'clock, and then I sleep.
2 or 3 a.m. you mean?
AM.
Okay, wow.
Then I get active at night from 9 p.m. onwards.
Before the opening, you're already there at your desk.
Usually 9, just half an hour before. But before that will be more of the administrative work and sometimes do some marketing work for the course and doing my screening. And I also learned this lesson when I went abroad. There's like, most of the work is done not when you're trading. When you're trading, you cannot think on. I don't know whether it's true, but when I trade, it's really just applying and thinking a bit different. Like because when the market is closed, you off the computer and then you print out the chart. Everything becomes a standstill. And that's where you look at it. You can look at it very differently. But when the chart is moving, you're just in the action. No? You're not really understanding. Like, you're just really to just apply only. So I think a lot of work is done before and after trading. So for me personally, even though I start actively monitoring the market at 9, right? Before that, I'm doing a lot of screening on my own. I screen the market every day. I screen most of the time it's screening, and I can tell you screening takes a lot of work. Like, even though I'm gathering, I get some ideas, but on my own, I still screen the US market, Hong Kong market, and also crypto market. And I don't really have I use screener, but screener is not 100%. You still need to manually go and see whether it's ready or not. Then I will mark it down or have a notebook to mark it down, all this. And some of them I do share with my students as well. But for crypto, it's mostly manual. US stocks, I got scripts for my students, the scanning script. But crypto, I need to one by one go inside and then see the different the weekly time frame or sometimes the monthly time frame. And then I need to, when I go into a certain crypto, I need to go and see the fundamentals, like get a sense of whether there's a red flag there. So that was more a tedious process. Yeah. So that's what I do day to day, mostly.
And for your stock screener, why couldn't the screener maybe give you exactly what you want, whereas you still need to go another layer deep to filter out what the screener gives you?
Screener can only screen for open, high, low, close. Right. Open, high, low, close, and if you're looking for the specific bar formation. But if you're looking at, let's say, to check for previous swing low and then you want that kind of flush down, for example, we are able to do it, but there are certain scenarios that you will still miss. Because market is dynamic. Sometimes you say you want that swing low, then it could be in this manner, then sometimes it can be like this, then go up. or you want to flush, sometimes you could go up first, then flush. So you need a bit of like machine learning going on there. It's not like just checking for open, high, low, close, and some of my strategy require a bit of like judgment call also. You need to visually see it. Then you need to be able to draw that wave pattern. But how do you code to tell the screener to see that wave pattern? So that's the challenge. One of my coaches, Richard, tried to do that also. The best you can do is to shortlist the results. Then you still have to manually go and check one by one. Because sometimes they are not what you want and then they are not ready yet. Then I always tell my students, sometimes your screen is not for today, it's for maybe the next few days or next week. Like some of my trades that I took today is what I screened yesterday or last week. So it's a homework that is continuous homework that you have to do.
Is there any chance that one day you will actually fully systemize this entire strategy or system that you have so that it can kind of like run much more automatically?
I wish there's a possibility to do something like that. Like there's a machine learning and then you can do back testing and then you can really just click the button and then it can auto run by itself. But I've not found anyone able to do that.
Okay. All right. And maybe just one last technical question. So we talked quite a bit about the flush, bull and bear trap. So but the flush, of course, there's many variations. Some could be break, then immediately zoom, reverse. Some could be break, then 3-4 candles down, then reverse. And some could be break, down for very long, maybe 1-2 weeks, then suddenly reverse. What's your take on all these different types of variations of the, the flush?
So initially when I created a course, I actually define them specifically. There's a difference between a flush down and a flush down bar. A flush down bar is definitely a flush down, but a flush down may not be a flush down bar. Because a flush down can just be small bars that is going down rapidly. There may not be a big red bar. We still call it a flush down. But a flush down bar means the red bar is outstanding in range. So I define that specifically for my student. So if you see either one of these, it's still bearish. It still shows that there's rapid price movement down. Yeah, so we define it very clearly. And then in some of our strategy, we are looking for flush down bar. Yeah.
Also, sometimes you might look for a series of bar and sometimes you might look for just one big red bar down.
Correct.
Okay. Then what about the reversal? Does it matter whether it's like a few candle reversal back up above support or you're looking for like a big green candle, 1-2 candle back up above support in terms of maybe the reliability of the signal?
Okay, so I actually understand what you mean. Like after you hit the support, then you reverse, right? Do a bear trap. Then when you reverse, the bullish bar has to close above the support. But of course, like in your scenario, if you close too high up, then this is what we call too wide. Wide, WIDE, too wide. So we have an entry rule. If it's too wide means that your entry and your stop loss is more than the current ATR. Let's say the current ATR, there's this indicator called the ATR, average true range indicator. If it's $1, currently at $1, and then let's say your green bar move up here, and then you want to enter when the green bar close, and then your stop loss, the distance between entry and stop loss is let's say $2. So $2 versus your current ATR of $1, right, is what we call too wide because it's more than your current ATR. So in that scenario, my students either wait for it to retrace back below the $1 mark, or they just don't take any. Don't chase.
Okay.
Because sometimes if the bar, the big green bar came out, right, and then you still want to enter, right, what happens is that either you tighten up your stop loss or you aim much higher. And most of the time, right, if you still maintain your stop loss and the big green bar come out, you still enter, right, your take profit target could be very high up. And this is the instances where a lot of traders will always say that, like, I wait too long, never hit target, then they come back down. Because they overpay for the trade. We use the word overpay.
All right. So is there anything that, you wish to add, right, in today's show that we didn't have a chance to talk about earlier?
I think we mostly covered part, and it brings me back to memories when I was in the prop desk. I still cherish those moments. Maybe you can share, like, I think a lot of people always like to ask, like, what's my biggest drawdown? How I handle it. Beyond the kind of success story, right? I think one of the biggest drawdown I have was when I was in the prop desk. I remember it was doing non-farm payroll. We trade we call the data, right? And then the market go against. I think during that time that was a very bullish data. Then naturally is to go long lah. So it was a very bullish data, but I don't know why the market. So I went in to go long. It was bullish data. Some job. The non-farm payroll was positive and things like that. So I went in, but the market keep going down. He keep going down, and I just don't believe. Wow, data, Bloomberg data, damn good. Just buy some more, average in. But I keep going down. Right, and I still don't believe how can it go down 100 points? No way, man. I just keep buying. But then I was down about 10,000.
Damn, matter of minutes or seconds.
I think within like two minutes. Yeah, so my daily drawdown during the time I was a bit in 2-3 years in the desk. I think my daily drawdown was like 20k given to me, and I don't believe, and the market keep going down. Wow, suddenly right, you were so happy for the data, and suddenly your whole the reality struck. Holy shit, what did I get myself into? Then things get worse. Then it become like 20k. No, like when in the prop desk we have a risk manager, so he sit across me. I still remember he gave this signal. This is cut. You cut. He asking me to cut lah, cost 20k. So because they don't press the button to cut for you. You have to cut yourself, but they'll give you a signal. I know I hit my risk limit. Then I signal that I need to have more limits. That means buffer. That means I want to continue. It's like you want to have more leeway lah. So I think he called my boss and then give me more leeway, so I can go beyond 20k for the time being. And after a while, the market did reverse back, but came back down. Holy shit! I was like long, don't know how many futures. Then that hit almost like 30k. The moment I cut, then I see the signal. Means I'm dead. This signal.
What a signal they give
Then I
you.
cut. You cannot already. Then I cut. After I cut, the whole thing reversed.
Oh my!
Wow, that was
That's where the keyboard and mouse all fly.
memorable. I lost what I made in the last 1 month plus.
Oh, in that few minutes.
That's why sometimes when traders tell me, right, they lose like a day, lose what they make a few days ago. They don't understand what is really like sometimes in the desk. It's not just happened to me, it happened to some traders as well. Even good traders sometimes. And I use the word tilt, that they will use the word tilt, right? I also tilt during that time. Wow, cut already, the whole thing go up. Wow, for the day, I cannot trade anymore. I stop. But after that, I go back home, I do an AAR with myself. I go back to the price action and everything, and I ask myself, why am I stubbornly long? And I learned a very, very valuable lesson. Data bullish doesn't mean the market must go up. Sometimes it came down because people say it's priced in. No matter what, you still need to look at the price action. And if suddenly something turn against you, right, like very bullish and things keep going against you, you just need to cut first. Don't question the market. That's one key lesson I learned. But fortunately enough, within the next 1-2 weeks, I made back. So even though I lose 30, I make back 30, 40, right? But even though it's not glamorous, but it is one of the greatest lessons I learned. I still I cherish the lesson more than the money that's made. Yeah.
And the lesson is to trust the price, not the data lah.
Yes, I learned it the hard way. I used to keep saying that, but you never know until you really went through that thing, and then you know how hard it is to build back the capital.
And when you say you sold at the lows, that thing rebound, is it because you cover your trade, or is it because it's meant to rebound at that point in time already?
And after I see it does a bear trap. And I cut exactly at the lows. Holy shit.
And when you do your AR review, you printed your charts at home and you're looking through the charts and then try to review on it, is it?
Yeah, this is also one thing I told my students. Last time, even though I I never splurge on anything, right? I lead a very low maintenance lifestyle, but I have a printer. And I always, every month I spend a few $100 on the printer ink. Every day after I go, at the end of the trading session, I print out all the charts. S&P, Nasdaq, Dow Jones, Nikkei, gold, silver, euro, dollar, everything. I print out color. I want to color because I want to see it like as if I'm looking at the screen. Then I print out, and then I'll go back home. For the day, I stapler. Then I will just, whether I'm watching TV or going out, eating or what, I'll stare at the thing and look for pattern. I'll circle pattern and then I'll just draw. If I enter here, will I be able to take profit? And I'll just see, this pattern I see very familiar, keep repeating itself one. This kind of bull trap more potent, or this kind of bear trap more potent. What happened before the bear trap that will make it more potent, this bull trap? Then I look out for this kind of scenario, then I compare every day. So that's my homework. That's why I say, trading that time, you can't really think. You can't really do the kind of analysis. You need to, beyond that, some traders, they just close the computer, go home. But actually, close computer, I know that I need to do a lot of homework. I don't do, because yesterday's lesson, right, you cannot go to waste. And if you don't learn from yesterday what happened, right, you will forget in 2 days' time. Because market moves very fast.
Is this something that you still do till today? The AAR?
Today I don't, because my set of strategy that I created, right, is already fine-tuned over the years already. So right now, what I do is I just visually see a lot. I don't really do that, print out the charts anymore. But whenever I see some interesting setup, I do print them and I'll put it one side first. Then I'll tell myself, this could be my new structure. Yeah, then after a while I see, no lah, this one not very powerful. Like, I don't think this is repeatable and this is... Okay, so actually what's a good strategy? A lot of people ask. A good strategy is something repeatable, right? If it's repeatable, means you got edge. So that's what I look out for. And the reason why I talk about price action manipulation is because manipulation pattern is very repeatable. You can see it almost on a daily basis, and there's a basis for it. Yeah. So I do look out for this kind of patterns. And even though it's non-manipulation related, sometimes I also look out for it. Because sometimes I know some trading strategy may not be manipulation related. It could be a technical related. I also look out for that as well.
And let's say you potentially identify a new setup strategy pattern that you may want to trade in the future. How do you then validate it to say, oh yeah, this one really has an edge in the markets? Do you do any backtesting, or you kind of have your own way of validating it?
Okay, so what I do is I will print out the last, if it's on a weekly chart. Okay, so last time if it's on a scalping, I'll print out the last 90 days. It's let's say the swing trading weekly chart, I'll print out the last 5 years. Then I will randomly choose 10, 20 stocks. Then I will print out already, right? Then that's my homework for the week. Then I'll just ask myself, okay, this is my pattern. Then I'll just circle. And I will be unbiased one. That means I don't play cheat I give chance pass. No. I'll be like a strict teacher. This one, I enter, okay, it's a plus or minus. That means win or lose. Okay, then after that, it's very manual one. That's why because I don't know how to do backtesting. So I just manually do. Right, then I will just put in a piece of paper like I'm a teacher marking the paper. Okay, this stock, last 5 years, plus 4W, 2L, 4 win, 2L. Okay, then I do everything. Then I consolidate in a simple Excel, then just calculate. Then if the last 5 years I see that 60-70 win rate, and when I do my so-called manual analysis, right, I can see that he always move at least 1 to 2R, right? Then to me, it's a good strategy. Because it persists out of randomness also. Because I randomly pick 10 stocks. And I'm biased in my analysis.
Speaks a lot about your work ethics.
Yeah.
Okay, so one last thing. Where can the audience find and connect with you? I think earlier you mentioned we'll put your link right in the description below, right? Since it's better for you that way. I think Elson actually prefers to be kind of low profile, but still there's a way to connect with him. I'll put it in the description below, right? If you want to connect with Elson.
Yeah, you guys can actually reach out to me. You can find me and my courses at pirahnaprofits.com. Right, you can find me, Adam, Bang, the two of us are actually training over there at Pirahna Profits. Adam does more on the investment side, Bang more on the option side, and for me, it's more on the price action manipulation trading side.
All right. So thank you so much for your time, Elson. I appreciate you.
Thanks, Rayner. Thanks for having me in this interview. Nice chatting with you.
Hey, what's up, my friend? So, just one thing before you go. Do you know you can download the transcript of this episode? This way, you can easily recap the lessons and insights of this episode without having to listen to it again. And that's not all, because you can also download the transcripts of all the past episodes and quickly catch up on what you've missed. So if you're interested to do that, then go down to raynerteo.com/script. Script is spelled as SCRIPT. So once again, it's raynerteo.com/script. Go check it out and I'll talk to you soon.